I just uploaded 3 videos explaining why countries fight trade wars, how they are won, and how China and the United States have performed in this current round of escalating standoff. And then, out of nowhere, came a surprising announcement. The US and China have agreed to a 90-day pause. Let's be clear. While it's just a pause, this is still a big deal. Tariffs had reached extreme levels, threatening complete decoupling of the world's 2 largest economies. In this video, we're going to break down what this 90-day pause entails, who needed it more, and what to expect moving forward. Let's start with a recap on how things escalated. It started on February 1st, when America imposed a 10% duty on all Chinese imports. This was then raised to 20%, and finally 54% on Liberation Day. At this point, U.S. warned China not to retaliate, threatening additional tariffs if it chooses to do so. China, unfortunately, was in no mood to back down and retaliated in kind immediately. What followed was an unbelievable series of escalation, with total U.S. tariffs on China reaching 145%, and total Chinese tariffs on U.S. hitting 125%. These levels were the most extreme we've seen in decades. In a telling statement, Beijing declared that at these levels, trade with U.S. are effectively unmarketable. But tariffs weren't the only weapons in this battle. Both countries rolled out a series of non-tariff barriers. On the U.S. side, it ended its de minimis exemption, which had previously allowed packages under $800 to enter the country duty-free. China, on the other hand, added American firms to blacklists, launched anti-dumping investigations, suspended purchases of U.S. farm products, and even delayed aircraft deliveries. Perhaps most strategically, China placed export controls on key rare earth elements like terbium, dysprosium, and gadolinium, where it controls about 90% of global refining capacity. So, what did this new agreement actually change? Announced after 2 days of negotiations in Geneva, the deal sees the U.S. reducing tariffs on Chinese imports from 145% to 30%, which includes 10% base rate and 20% tied to fentanyl concerns. China, in turn, drops its tariffs on U.S. goods from 125% to 10%. Both sides also agreed to suspend 24 percentage points of their additional duties. On the non-tariff front, China agreed to roll back most of its recent retaliatory measures. That includes pausing export controls and other obstacles targeting American firms. To manage future disputes, both countries are establishing a framework for ongoing dialogue. Working-level teams will also be formed to conduct sector-specific talks. Now let's look at who got the better end of this deal, or rather, who needed it more. To be clear, both parties were hurting badly. While the U.S. economy is broad and diversified, it relies heavily on cheap Chinese imports, both raw materials and finished goods. When those imports became 145% more expensive, it hit not just manufacturers and retailers, but consumers too. Supply chains were thrown into chaos, leading to delays and layoffs. With inflation already a political headache and midterm elections approaching, America has little tolerance for prolonged disruption. For China, on the other hand, the collapse of exports to the U.S. was a serious threat to factories and workers in its manufacturing heartlands. And with China already grappling with property market woes and weak domestic demand, losing access to the U.S. market was a blow it couldn't afford to ignore. Moreover, prolonged conflict risked isolating China from other key markets, especially if these countries agree to cooperate with the U.S. as part of their trade deals. So for the U.S., this agreement brings meaningful economic relief. Slashing Chinese tariffs to 30% could ease recession fears, restore some certainty for American businesses, especially those prepping for holiday inventory, and has already boosted investor confidence, as reflected in financial markets. For China, it gained critical breathing room. With tariffs lowered, Chinese exporters can re-enter the U.S. market, which is especially important heading into the holiday seasons. The economic growth outlook improves, Chinese stock indices have rebounded, and Beijing gets diplomatic credit for showing China's ability to negotiate as equals with the United States. So who needed this deal more? It's a close call. China was probably hurting more, but the damage, at least in the short term, was more contained. The U.S., on the other hand, probably suffered less, but with its democratic pressures and broader economic exposure, had less tolerance for that damage. Put differently, China was bleeding more, but the U.S. was screaming louder. So, what should we expect over the next 90 days? First, trade flows will almost certainly resume quickly. Seasonal products and backlog shipments will start moving again. If the two sides can reach an agreement on fentanyl, the U.S. may drop another 20% in tariffs, offering even more relief. Behind the scenes, teams from both countries will get to work on technical and sector-specific talks. Markets should continue stabilizing, but don't expect all companies to reverse their recent moves. Many firms that had started diversifying their supply chains may simply hit pause, not fully abandon those plans. Looking further ahead, things get more complicated. Core issues like intellectual property rights, state subsidies, and markets access are still unresolved. These are deeply embedded in each country's economic model and won't be solved overnight. Even if the 90-day deal is extended, some areas, especially strategic sectors like semiconductors, AI, and defense, will likely remain decoupled. We might see progress in specific sectors like agriculture or pharmaceuticals, but a comprehensive agreement? That's likely still a long way off. Meanwhile, both countries will keep trying to reduce dependency on each other. Expect continued investment in alternative suppliers and regional trade partners. China Plus One strategies will remain in play. And in the long term, the underlying rivalry isn't going anywhere. Trade relations between the U.S. and China will remain tense for the foreseeable future. That suggests we've entered a new normal, a world of higher trade barriers, persistent non-tariff measures, and selective cooperation.